Get ready to be amazed. Get ready to be transformed. Get ready to believe it is possible. You're entering the growth zone on the Guts and Glory Show with your host, Louise Scott.
Hey guys, welcome to the Guts and Glory Show, a show dedicated to helping you learn just a little more so you can be bigger and better than you were before. Today, I'm excited to welcome an e-commerce phenom, 9 figures in revenue being led through this entire organization. I'm excited to get into this because if you're like me, you probably want to know, how can I develop passive income? How can I make money doing something other than my primary way of making money? So with that, welcome to the show, Will Basta.
Awesome, Lewis. Thanks for having me. I'm happy to be here.
Absolutely. So you've been traveling like crazy. Before the show, you were telling me about being in Spain for 2 months. And I know that is, or in Europe, sorry, you may not have said Spain, but in Europe. And I know that that's a dream of so many people, is to be able to have that type of freedom and flexibility. So tell me a little bit about what you do and how you're able to have that sort of lifestyle.
Yeah, absolutely. You were right. I was in Spain as a base, but sort of hopped around a little bit from there. But yeah, traveling's always sort of been in my blood regardless. But in terms of, if I take a couple, steps back in terms of where my career sort of started, I actually started in your regular 9 to 5 Fortune 500 company. I was working in health tech for about 4 years. On the side, I always got involved or had I should say, sort of, there was a bug that I had that was liking the fast-paced type of environment. So I left there and I went into the startup environment. And the startup environment has a lot of different parallels to being an entrepreneur. You get to work with the entrepreneur as the founder a lot of the times, whether it's the CEO, et cetera. Stuff's coming out of left field all the time. It's fast-paced. Things are always changing. I did that for a while. And while I was actually working for multiple different startups who were doing innovative things in tech, I was getting involved sort of early on in e-commerce. Around 2014 is when I first opened up an Amazon business. It's crazy. That was 10 years ago at this point. Didn't have the most successful product, but I got to get involved in it on the early side. And when you do it yourself and you don't have people to help you with it directly, it's a lot of time and it's a lot of learning, right? And it's a lot of money lost and a lot of different things. But to me, it was an educational point, right? Got to learn the logistics front. Developing products, research, all that kind of stuff. We fast forward a few years from there, had a few different successful ventures in e-commerce. And my business partner and I essentially came together around 2019, where we noticed that there was a couple organizations out there that were essentially providing e-commerce services for people who have zero experience and just want to tap into the market. Obviously, it's been a huge boom over the last 10 years. There's been a lot of, VC firms that have gotten involved in the private equity. Bad taste in their mouths. Some have good experiences, some have bad. Obviously, it's it's in its infancy stages still, I would say. But during that period of time, we were noticing that was a great model, right? But what we also noticed is that it wasn't effectively executed by the companies that were doing it. And so that's sort of where the light bulb turned on. We said, hey, we can do this better. We can come into this. We can bring our experience in and we can actually start an organization of our own, but focus on true infrastructure and build out the company in a way where it actually turns e-commerce into a sustainable asset that people can be confident in when they're partnering with someone. And if we cut, now here we are, we're 4.5 years in. We built over 1,000 different e-commerce assets for clients, primarily in the US, but now we're in the UK market, Canadian market. We've just opened an office in the UAE, so Dubai. That's a massively emerging Amazon market. And essentially what we do, clients come to us and they can have all different backgrounds. Essentially, they're financially comfortable and they're looking to diversify. And they come to us as a partner in the space and they pay a startup fee and we take 99% of the operation away from them. We start, launch, scale, and operate an entire e-commerce business for them on multiple different platforms, growing it into something that potentially is an exit value down the line, but at the end of the day is producing cash flow month over month. And we do it in sort of a profit sharing model. And that's essentially the heart of what the business model is that we do for clients. There's a lot of different layers of that. But yeah,
that's
where we
awesome.
are today.
One of the things that happens is that when you don't know the business, you don't know the industry, you become very fearful of kind of, dipping your toes into something. Several years ago, I had somebody contact me about starting up an e-commerce store. And it was kind of like what you said, that it was unknown. There were companies out there who were not doing it the right way or who were not getting the right results. And so I was kind of like very timid. I never did it. I should have done it. And just lost some money. Like you said, at the beginning, you always kind of lose money. But what is it that you're doing different that is giving you kind of that edge that's allowing you to be more successful? You're talking about opening up 1,000 of these stores. What has given you the edge in this space that maybe some of those other companies didn't have?
Yeah. I mean, if we look at where we are now, there's a lot of different factors that play into it. And initially, it was really having, I would say, you have to have obviously manpower and a team, but it initially came down to us being built actually as a wholesale distributor for products and a logistics company, and then an e-commerce management firm. So sort of three major pillars of it combined into one. And so if you're coming in alone, obviously you have to trust a third-party supplier. You have to do this, and this, potentially hire, find a warehouse facility, all of that. We sort of combine it all into one strong powerhouse initially. Now where we're at is, we've got 10 years of data in e-commerce. We've tried and tested so many different types of softwares, ways to run facility and warehouses, models on these platforms, understanding what platforms to actually sell on, when and where. So it's a lot of testing that we've gone through, a lot of experience that we've had. That's really where it brings us today. And now we have strategic partnerships. I mean, we're a corporate partner of TikTok Shop. We've been able to test different markets. We obviously, at this point, have a lot of connections when it comes down to manufacturing products, reselling products, and getting connected into distributors and or brands and manufacturers that don't just open their doors to everyone. And so that's something that obviously we're fast tracking clients into that as if they've been doing this for the last 10 years, but they haven't. And so it's really a mix of all of that. But at the end of the day, the way the company is ran is it's in a manner where we keep a lot of the traditional aspects that I've always worked with in e-commerce, but make sure we're also innovating at the same time, keeping a balanced approach with that. Because one way or the other, you keep it too traditional and you're not changing with how fast-paced the industry is, you're going to fall behind and you're going to flatline in your margins. And if you obviously innovate too fast, you can be ahead of these things and you can miss out on and cause a lot of different, when we're starting this, we're leveraging it's our client's business, right? And so we're not here to go test anything with our client's money. We run our own stores too behind the scenes, and we innovate on those with R&D and all this kind of stuff. And then once we prove out models, and then we implement those with our clients. And so it's having a good balance, striking a strong balance between those two. And then everything else I just sort of mentioned with the years of experience. Each year that we get deeper into this, we become more experienced, we have stronger connections, and we obviously leverage everything we've done. And that has a trickle-down effect to the outcome that the clients and partners have that work with us.
Yeah, I agree. I think that there's no substitute for experience in the marketplace. And I think people, they undervalue how important that is because everybody wants to get like rich quick. Like it's like, you want to make that money right now. And yeah, that happens every once in a while. But the reality is that like wine, right? It gets better with age. And I think your company and your knowledge of an industry also gets better with time, the more time you're in a marketplace. And so I think that is an edge, having more time in the marketplace. Now, you've talked about being an entrepreneur and you went from 9 to 5. And I think this is really awesome to hear because there's a lot of people in the 9 to 5 who are scared to step out. They're scared to take that leap. They're scared to invest money and lose it. Recently I was talking to a friend and we were talking about entrepreneurship, and he's not an entrepreneur. And he was saying that, I want to do something that is like a sure bet. And I said, there's no sure bet in this. Like, if you want to be an entrepreneur, like there's no sure bet. But how did you switch that mindset from like, I have a 9 to 5, but I know if I want to live in Spain for 2 months, I need to do something different. What was the thing that got you over the hump? Was there like a book? Was there something you listened to? Was there a mentor? Like, how did you make that transition?
Yeah, it's tough, and it's a very, very good thing you bring up here because, that fear is something that will always sort of be there. I still, to this day, when I go into side ventures and different things, you always have that kind of thought process like, but that is just part of what it is, right? And you get thicker and thicker and thicker skin as you get involved and as you have your losses, right? You have your success and it becomes sort of addicting. But that being said, to go to your actual question, I'd say there's a lot of things that are a culmination of it. I will say, a big part of, at least for the origination of this organization, it was really nice to go into it with a partner, right? And so like there were times before where I've tried to start businesses. I'm not saying that was the first time ever, but a venture like this, I was fortunate to be able to meet someone who was at the same stage, right? And we connected sort of like yin and yang when it comes down to how he approaches business and how I approach business, and our mindsets, which were very, very different, but also very alike in a lot of different ways. And it just worked so well. And going into it with someone not everyone's going to have that opportunity. So it's hard for me to give you that answer. I feel fortunate that I was able to meet my business partner, Jeremy, and do it at the same time. But I think what that leads into is, if there's going to be a way for someone to overcome this kind of fear, this network, meet people, be out around other entrepreneurs, people that have gone through it, right? That can help, that confidence can help compound when you hear other stories of success and failure. And you never know who you're going to meet. And if you meet that one person, then 5 years down the line, you never know what that's going to turn into, right? So I'm a really big believer in just, obviously it's typical to say networking, but just people, right? Everything is difficult to go on alone. You might have to do something alone, obviously, when it comes down to being an entrepreneur, but it's different when you've heard stories and you are constantly out there networking, and you sort of see what's going on in the environment of an entrepreneur. And I think that is super, super exciting and helps give you a little bit of an edge to actually take that leap.
Yeah, I mean, I think that we can't underestimate the power of your network. And I know this is so cliche to say, but like your network is really your net worth. Like that's really what it's all about. And when I think about like my success, and I've started several businesses, and as an entrepreneur, it feels like people were always involved in me getting to the next level. It was very rare, even if it wasn't a partnership, because you mentioned you may not be, lucky to find a good partner, but even when it wasn't a partnership, it was like the right vendor or the right decision because someone said something to me that I took to heart and so forth. And so I think
totally
really powerful. Now, it's so easy to be on this side of success, and people go, well, yeah, you can say that because you're successful or you've already achieved, etc. And I like to tell people it's not always like that. So I'm curious to hear a story of something you tried that failed. And then what was the lesson that you learned from that failure? Like, what happened? What did you take away from it?
Oof. I mean, there's been a lot of different failures, when it comes down to it, and that's just the nature of what it is, right? And the first couple of things that come to mind, I'm going to speak to the one that I think is after I actually made it in terms of financial success with having a successful business. Because once you become successful, obviously you're around more high net worth people. You're networking at a different level, right? You are just doing things that you just previously didn't, right? And you get a lot of offers thrown in your direction, right? Because you are a business owner, because you've had success, because you have a higher net worth and all of that, right? And this sort of is a mix of all of it. But I mean, still to this day, you get investment offers and all of that. And I used to be Mr. Yes Man on literally almost everything, right? And I think this is a lesson that a lot of people learn. Almost everyone learns it, right? If they don't come from initial money and they start to have it and they want to be involved in everything, right? And, I've put my money, substantial amount of money in a few different investments, and I'm not going to label specific ones. I'm going to keep that sort of under wraps, but ones where I honestly was at that point where I was just saying yes because everything looked like the right opportunity. And what I learned from that is these days it is very, very different for me, right? And I have more money than I had last time, but I am way more strict when it comes down to the level of how I look into something, and even if I'm going to give it a time of day. It's a lesson learned when it comes down to it's not always a yes for all of these things. You really need to understand, allocating your money to different things. And when you start getting more and more success, there's going to be more stuff thrown at you, and you need to learn to honestly really evaluate things a lot more stricter. And yeah, I mean, I can go on that topic for a long time. It's hard to not give specifics of it, but I think learning from it is you can't always be a yes person. Once you start to be successful, you're going to get a lot of these kind of propositions and things thrown in your direction. And it's important to understand where your time is and where you need to allocate it properly, and also how you need to assess certain opportunities, and really step outside of the box. So,
Yeah, I think scrutinize the opportunity is kind of what you're getting to, because the thing is that every opportunity can't be the can't miss opportunity. And I used to hear that from other business owners, like, this is a can't miss. I have to do this. I have to do this. And I'm like, dude, there's going to be so many can't miss opportunities coming your way. Just like relax, scrutinize the opportunity, make sure that you've like really vetted it. Because when I look back at my mistakes in business, every single failure that I've had was always because I had like an over optimistic outlook for the outcome. And I spent very little time scrutinizing the opportunity. And every time you end up losing money doing that. And so I think scrutinizing the opportunity is so clear.
Well put.
What is it that really attracts you to e-commerce? I mean, we talked about the flexibility, but what are some key things that e-commerce can do for people who don't know anything about it? Somebody like me, I'm a lawyer. What is it that e-commerce can do for us?
I love the global aspect of it because it's not location dependent, and internet penetration around the world is becoming more and more common, right? Where people have access to internet, access to shopping, and platforms like Amazon are going into different markets all the time. And to me, it's great that you could be located literally anywhere, the US or anywhere. And depends, it sort of leads into something else I'll talk about in a second, but essentially you can sell to someone completely across the world, right? And you can monetize stuff like that. I mean, it's part of the whole digital age in general. But to me, it's super exciting because there's always going to be consumers, right? And there's always going to be new markets that have new access to new products and new things that are getting developed. And you're really facilitating that. And you can monetize things pretty much like globally, right? And it's not location dependent when it comes down to capitalization, which I think is really awesome. A lot of things aren't, but e-commerce in general, if we just look at where it's going and how it's just, obviously the US filled consumerism, right? We are huge, when it comes down to Amazon and all of this, we're buying. And people start to forget about, okay, well, you're making money. And I was speaking to someone on a podcast last week about this. It's like you have successful sellers in the US, right? Where it's their side thing. You could be a lawyer, you could be whatever, and you have a successful Amazon business, but it becomes plateauing, where it's like, okay, well, what am I going to do next year? Because I'd like to take this to the next level. And historically, people are always thinking of, how do I expand my product? I'll just get a new product line. I'll do this, etc. These days, at least how we look at things in our organization is that, but also what markets can I go into outside of the US now? Because Amazon Dubai, for example, started around 2018, 2019. It's like Amazon in the US around 2015, right? There are these markets of which you have stability because you know the platform, and they're growing at a rate that is so substantial, but you have the benefit of the fact that you've seen it happen in another market like the US. And to me, that's super, super exciting, to be able to always see that we are in the infant stages of e-commerce. Like, people don't think that, but we are so early on right now in terms of where it's going, and honestly, what markets it's going to go into, and what platforms are still to come up into place. Because everyone thinks Amazon, but you've got your Chinese platforms. There's a bunch of them. I'm not going to name all of them. You have Mercado Libre in Latin America, which is essentially the Amazon of South America, which is huge, right? You have TikTok Shop, social commerce. I mean, I can go on forever. I'll stop there, but I think you get the gist of where I'm going with it. It's big on the global front to me. It's super exciting.
Yeah, I think globalization is really interesting, because in traditional businesses where you have brick and mortar, or maybe you have a regional type of business, you don't have access to a global market. And I think e-commerce does provide that. And I love what you said is you used to have to expand the product to reach more people. You had to go from one product to two products to actually grow your business. And now you can just go into another market. And I think that is very exciting. But to think that it's in its infancy, that's crazy. Like, to me, like, what else could Amazon do? I mean, like, you could buy stuff everywhere. I mean, the other day I bought these little headphones from TikTok Shop, and they were like $19, and they're better. I'm not going to say they're better, but they're they feel just as good as like the $300 ones that I bought. So it's amazing what you can do out on the market. Talk to me about the investment. Now, you had said that there's an investment to work with your company, but let's because I don't want you to be put on the spot and have to tell us what it
Mm,
costs to work with you. But what
yeah.
does it cost? Give me a range of what it would cost your average person who wants to get into this space, maybe wants to work with a company like you or wants to do it on their own. What are we looking at? Are we talking about ten
Yeah.
thousand dollars? Or are we talking $100,000?
Yeah. It's going to vary. So if our clients are generally business professionals, entrepreneurs that don't really have time, they have money and they want to diversify in. And then someone does have time and they are going to do it themselves, it's still going to cost money. I mean, you can go to some platforms, for as little as $30 and open it up and do all your research and spend a bunch of time and then spend a bunch of money on ads, et cetera. But if we're looking at partnering with, a firm that can do it on behalf of you, where you own the asset and they're operationally handling it for you, we start around 25,000 at our lowest tier, and we go upwards of over six figures. It depends on how diverse you want the asset to be, multiple different platforms, multi-channel, multi-country, all of that, a lot of different factors that play into it. And so there's a startup capital for that. And then there's a few different models that can be run underneath it. Essentially, there's obviously your traditional where you're purchasing products up front, maybe 2 to 5K of inventory at the beginning. Or there's some models where we run where we do a hybrid base. We've got facilities throughout Florida and the US, and we essentially have product on hand where clients actually will bill the clients once it's sold just to get a store moving. So you could call it drop shipping, but we call it fulfillment on demand, and it's actually from our facilities. And so it helps get traction on the business. But to truly scale a business, you want to have working capital to buy product up front because you're going to get better margins, right? The ad piece is something that varies based on a lot of different factors. If you're doing TikTok, like TikTok Shop, for example, you said you just bought a product off that. I bet you that you probably saw someone using them on TikTok, and then that intrigued you to click further and then go to the shop. That is, user generated type of micro influencer or affiliate type marketing, which is different than your traditional, obviously, where it's pay for ads specifically. What's great about the TikTok algorithm is you can actually partner with people like that and honestly have, depending on the actual collaboration, only pay when sales actually are happening. And you can also leverage the algorithm in the way where you're not spending a lot on marketing. But generally, historically, on Amazon and stuff, we're running off the foot traffic that's already there. So some huge marketing budget isn't generally necessary. So you're looking at, I would say, somewhere between $25,000 and $100,000 to get started, and then leveraging, a working capital line. Like I don't pay for my flights anymore because I run my e-commerce businesses on a business credit card, and obviously you have the points and all of that aspect. And the one last thing I want to touch on, which goes back to the initial thing you mentioned, I don't have the exact data on this because the last time I looked, it was around 18%. But in terms of all retail transactions, e-commerce is only about 25% of all of those. And NASDAQ predicts it's going to be around 90% by 2040. So that gives you something to look at and gauge of the infancy stages that I was messaging about. There's a lot of market to be capitalized on still, but that's generally where it's at. It's people pay more money this is a partnership that we look for a long term with our clients. You could have one business, you could have 10 with us, but obviously it's not cheap to get started with us. But if you compare it to something like real estate, getting returns earlier, and you're getting margins that are probably 2x that, if not maybe 3x in terms of your regular percentage. So,
yeah, when you think about that in the next 16 years, it's going to go to 90%. And it's going to be 90% of a much bigger population size. So, the upside from a revenue perspective is huge.
Totally.
Now, I will tell you, the 25,000 as a startup for any business is really not that much, right? So it's not chump change, but it's not so cost prohibitive that people can't get in. And so working with a company like yours, you put in the money and then you buy some product up front and you market it, and then you guys run the operations on the back end and do a profit share split on the after things are sold. And what does an e-commerce business expend in terms of profit margin? Because I know that some restaurants are they're 7%, and then in legal you may be able to get an attorney, a small law firm may be able to turn a 35-40% profit margin, but that's with them working as the lawyer. So what does e-commerce do? What would be what would be great if I was into
there is I mean, if you look at traditional wholesale, which we don't necessarily run, we operate that if someone has a lot of capital, because obviously the more you spend, the more volume discounts you're getting on sourcing product. For example, we've got a product that we sell out of Florida where we buy massive pallets of it at $300,000 at a time. So only some clients who can afford that are getting that, and they're getting 30% margins on that.
Wow.
But if you're doing traditional wholesale, which some other companies just offer, and you just have your basic 30, 40,000, I mean, your margins are going to be lower, like 8 to 10%. Or 7 to 10%, even lower. That's on the high side. What we run is private label. That's on Amazon. What we run is private label, which is a branded version of essentially pre-purchasing product and getting it manufactured. And that runs between 25 and 40% in terms of margins. But if we look at it overall, you're looking for e-commerce if it's executed right, depending on the platform that you're on, because that question has a lot of different answers to it, because we run 5 different platforms in multiple different markets. We shoot for essentially over 20% on almost everything. And that is the average of, obviously, that's the aggregate of all. You might have some products that are doing 5% that sell a lot of volume of units, and the next one has a 70% margin. But our goal is we're taking only a piece of the profit margin. And so we want you to be above 20%, and that's conservative, for us to actually make, a decent percentage of what that is, which is obviously it's not more than half, it's only 30%. And that essentially is for you as a client to sit back and have it completely operated for you. So it's a 99% operational business. You're just the financial driver of it.
Yeah. I mean, I think in 20%, if you think about investing 100,000 and you make 20%, and then you reuse that 100 and make another 20% and you reuse, I mean, the sky's the limit when you think about
reinvesting the profits. Yeah, exactly.
So the money churn rate is really powerful. So what else do I need to know if I'm going to get into e-commerce? What would be the 3 things that you've learned that I should know upfront? Like, what are the 3 things?
Yeah, that's a great thing to bring up, obviously, because it's always, even just bringing on clients, but just in general, it's good to set the right expectations. There is, we get requests for financial models all the time of what exactly can I expect and all of this. And we try to give as much of a blueprint as possible in terms of what we've seen historically, what we're going to be doing, and what we can expect to some extent, without saying you're going to make this, this, and this, because e-commerce in general, there are consumer trends that change. There are platform updates that happen. There are a lot of things that happen. And so John Doe and Jane Doe started the same day, and John might have an explosive month starting month 4. Jane might be month 7. So every trajectory is going to be different. People always ask us, hey, why don't you just do it all yourself, get a loan from the bank and build 1,000 stores yourself or something? That question has been asked historically all the time. And there's a lot of different reasons why, but essentially each store is its own asset, like real estate, will appreciate at a different rate and will actually have a different trajectory in terms of its starting. And so to really know and to understand is that you're going to have a lot of ups and downs, and there's not an exact time frame when you're going to get your first sale, which people know that, but it's good to reinforce that when you're going to have your first $10,000 a month and all of this. Our big goal is to make people their money back as soon as possible, so then they can get all profit. And historically, we do that within 12 months. Roughly. And so being patient in the beginning and understand that there is a maturity time frame, just like any kind of investment, that's huge. Also that, and how we also do that to make it sustainable is make sure we sell on multiple platforms, like your TikTok, like your Amazon, because they have different consumers. There's different products that do well. Also, it's a fast moving environment and things change. And so just like anything, you come on with a business model and we're running it a certain way. We know that it's doing well here, but there's always going to be opportunities to make a shift if we know you're going to make more money doing that, because in turn we make more money. And so expect change in e-commerce, right? This is something that always is going to evolve, right? So.
I think thanks for laying out that it's like a 12-month thing, because I have a follow-up question to that point. And is there a way to accelerate that 12 months? Like, is more ads, more money into the investment, like, or is this a 12-month thing regardless of what level you come in at?
I've seen people break even as early as 9 months. There is a way to accelerate it. We can, on the Amazon front, we can actually purchase a pre-opened asset. So a store that was opened a minimum a calendar year earlier. So it passes sort of the maturity algorithm kind of process that happens in the first 6 months. And so as opposed to 6 months in or 4 months in, maybe 2 months in, we can deploy more capital, but ultimately into product. Ultimately, what's going to, after your first 6 months, historically, the more money you're putting into product at that point, obviously, if you're making a 20% margin, you buy 100K of product is more than you spend $10,000, you're going to make more money. I'm not saying you put $1 million in your art, we can sell through that in a month, but within reason, if you have more money to deploy, be prepared to have the right working capital. Because when I see stores hit a point where it's hitting a ceiling and it's a client, it's generally because they didn't prepare enough for that kind of success. And we had to stop buying products when we could have taken it to the moon. And so if you have the right resources behind you, prepare for that. And we actually know, based on the client, we do sort of a profile where we sit down with them during onboarding, realistically, in this case scenario, what are you able to potentially deploy if you're comfortable doing it, right? And knowing that, we can fast track things depending on, like I mentioned before, certain products that we know there's a high MOQ, minimum order quantity, of something that you can't get your hands on if you spend 50K, but if you spend 100, we can source it for you and it's going to sell fast. Those things we bucket certain clients in based on what they can do in terms of the financial deployment into products. And so I say 12 months because that's historically, and we like to underpromise and over-deliver, but we have clients that come in that have deeper pockets and are ready to deploy more. Those clients break even much earlier. And we know sort of how to approach it because we know we can go down this route. And if we hit a point where they are doing really well, we're not going to get hit with a roadblock from not having the right working capital, which in turn can affect your store's trajectory for months after that. Because Amazon and these platforms don't like it when you run out of inventory or where you just stop selling something or whatever it may be. There's a lot of factors that play into the algorithm. That is always the most important part, or one of the most important parts of being successful on these platforms. And so we want to keep the store healthy, products in place, and obviously as success happens, making sure you can compound on that, and you need money to do so.
If you're spending $100,000 in inventory, essentially the goal would be to sell that inventory in that month and then reuse that same money to sell, to buy and sell again, correct? Like you don't need $1 million to buy $1 million of inventory in this system.
Yeah. And it's, there's going to, again, it's some of these questions, it's hard to answer because some platforms are just going to be a little bit different, but in terms of like sell-through rates and certain products and all of that, but you get paid out bi-weekly by most of these platforms, unless you're doing like Shopify, right? So every 2 weeks. And there is a lead time sometimes with products. Obviously, you spend $100,000, it might not come all at once. Mm-hmm. And so if you're doing large purchases like that, you need to have a cushion, and you need to understand that in the beginning, it might take 6 weeks or 7 weeks, and it might come in batches, right? Mm-hmm. And so those are really more for clients that are more qualified and aren't going to lose their mind if it doesn't sell through within 3 weeks. Yeah. Right. But you can gradually get to that point. We build confidence with clients too. We've had a client came in, they said they only had 5K for inventory. And, a month later, out of nowhere, they're like, I got 200K. I want to buy all these toys. We're like, okay, we didn't know that. You should have told us earlier that you were that kind of, that kind of client. Right. But he just wanted to see it work. Right. Mm-hmm. And so we are flexible when it comes down to, you can get more bullish as you see consistency, right? That's like with anything. You want to put more, if you're making money by putting money in, of course you're going to put more money in, right? And we're not asking people to spend $100,000 up front. It could take 3 months, it could take 6 months. And so, but there is that kind of period, and you need to understand too. And we can go into a question you might even ask, like, what are the biggest risks, right, mm-hmm. of this? The biggest risk is that you're on a third-party platform. We don't own the platform, mm-hmm. right? It's not like Amazon is going to go steal all your money, but sometimes they might hold a small reserve, right? If you get a lot, we avoid this by selling products that don't have high return rates, like electronics. But if you get a lot of returns, they might hold a reserve of what they're supposed to pay you out and not pay you out bi-weekly on all of it. They might be holding 10% or something like that. And these kind of things obviously can affect cash flow, right? And so there's those kind of things, but working with us, we do an inventory guarantee. So if anyone buys inventory with us in that manner in bulk, we actually have a 90-day, or we'll refund you the difference if it doesn't sell through fully. And then we also do a buyback on the upfront. So if you spend 50K with the contract term, if you don't make that back at net, at minimum, we pay the difference. we try to mitigate as much risk as possible because it's an alternative opportunity. But what we can't control is Amazon and TikTok and all these platforms because they're constantly shifting, but that's why you pay us so we can stay ahead of the curve, know what policies are there, are changing, know exactly how to approach the system and the platform as it evolves.
And you obviously have a vested interest in the success because the business model requires the person
runs off what we make for you guys. Yeah, exactly.
So, well, this is awesome stuff, man. I learned a lot today, and I appreciate you being on. If somebody want to get in touch with you and learn more about working with your company, how would they reach out to you?
Totally. We got our website. It's www.ecomwithacv.io. That's ECOM with ACV.io. And then Ecom with ACV is our Instagram as well as our YouTube. We're all over that. A lot of educational stuff, interesting stuff that's happening in the industry, et cetera. Our calls are very consultative. We're not here to push any kind of crazy sales. So it's more about learning about essentially what you're looking to get into. And if anything, it's educational on the industry. And then we take it from there.
Awesome. Well, we'll put everything in the show notes and the link so that they can reach out to you. And it's been good for me because I didn't really know much about the industry. For sure. I've learned a lot. So I appreciate you being on, and I appreciate you guys for listening because you've been listening to the Guts and Glory Show.
You've been listening to the Guts and Glory Show. For more and to learn more about Luis, hit the website at luisscottjr.com. For consulting opportunities, hit 8figurefirm.com. That's the number 8figurefirm.com. We hope you've enjoyed the show. Make sure to like, rate, and review, and we'll see you next time on the Guts and Glory Show.